Ladies and gentlemen, good day and welcome to the Tata Metaliks Limited Q3 FY22 earnings conference call, hosted by Monarch Networth Capital Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Sahil Sanghvi from Monarch Networth Capital Limited. Thank you, and over to you, sir.
Yeah, thank you, Faizan. Good evening to all. On behalf of Monarch Networth Capital, we'll welcome you all for the Tata Metaliks Q3 FY22 earnings call. From the management side today, we have their MD, Mr. Sandeep Kumar, sir, their CFO, Mr. Sen Gupta, sir, and also joining us is Pawan, sir, from the Tata Steel Investor Relations team. So without taking much of the time, I will hand over the call to Sandeep, sir, for the opening remarks. Thank you, and over to you, Sandeep, sir.
Hi, thanks, Sahil. Good afternoon, everybody. This is Sandeep Kumar from Tata Metaliks. Well, we will take a lot of questions from you guys, but just to give a little bit of a summary. Well, the performance of quarter 3 has been a bit mixed. In fact, lower than what we would have wanted. There have been some positives, there have been some negatives, and I'm going to summarize that. Number one has been the higher cost of raw materials. Iron ore prices peaked during June and July, and thereafter they have come down, but the impact of those prices normally takes a few months to come in. So that's played out this quarter. And of course, coal peaked in September, having crossed $400, maybe I think about $410 FOB Australia. So that also you see some impact, although not fully, in quarter 3. So iron ore impact, coal, and of course coke. Whatever we buy from the market, we buy about 20% from the market. That's been so all these three factors have played an important role in eroding our margins. However, we were able to get an increase in the finished goods prices in quarter 3, though November onwards the prices started dipping on the pig iron side, and therefore the full increase of the cost push could not be translated. Significantly higher. If you look at the numbers, it was down by let's say the pig iron volumes. They came down compared to the previous quarter. So they were at 76,000 tons versus 91,000 tons in the previous quarter. So that's about 16% drop. But the ductile iron pipe sales were up by 30%. Compared to 52,000 tons in the previous quarter, we did about 67,000 tons. Also, for the purpose of record, this quarter the ductile iron pipe sales, the quarterly sales of quarter 3 have been the highest ever. So 67,000 tons as far as our memory goes. So 1,000 tons were a tremendous performance in terms of deliveries of ductile iron pipe. But pig iron to that extent was lower. So, and mind you that for us, the main, I would say, profitability has been coming in from pig iron this year, because the ductile iron pipes continue to be delivered at old prices. We are one of the few players in the industry which are still honoring all contracts, and therefore we continue to supply at old prices. So there have been newer bookings as well, but the proportion of bookings is, therefore you do not see the increase in pig iron prices.
The audio is slightly breaking from your end, so please check.
Oh, is it? Okay. Is it better?
So it's still breaking. Yes, sir. Please go ahead.
Yeah. So as I was mentioning, the ductile iron prices continue to be at the old numbers, which what we booked in Q4 of the year. So that's been the problem. So the raw material prices were up, pig iron prices were up, but not to the same extent, and DI pipe prices have been more or less, has seen only a marginal increase. So that's the problem. On top of that, we had taken a shutdown of one of our blast furnaces, the larger one, about 10 days. This was a planned maintenance shutdown, but when it came back, there have been problems in trying to stabilize. That's kind of really hit us on the fuel rates and therefore on the cost structure. So on the whole, if I were to summarize, raw material cost push, operational performance of blast furnace down, pig iron deliveries lower, but that's because of availability, not because of market. Ductile iron pipe deliveries, finished goods prices have been higher, but not to the same extent as the cost push. That is what has squeezed our margins, and that's why you see a profit before tax of, let's say, about 50 crores this quarter. And good for us. But
Sorry to interrupt you, sir. This is the operator. The audio is now breaking from your line, sir. Ladies and gentlemen, request you all to please stay connected while we check the line for Mr. Sandeep Kumar. Thank you.
Yeah, we can connect him on this land.
Ladies and gentlemen, thank you for patiently waiting. The line from Mr. Sandeep Kumar has been reconnected. Thank you, and over to you, sir.
Yeah. Sorry, guys. So my call's having a problem. Just coming back, I think where I left. So the summary is that we've had a hit on material side and on performance of blast furnace. The positives have been the increased deliveries of ductile iron pipes and an increase in the prices as well of both pig iron and ductile iron pipe. But on the whole, I think as the operational performance improves and as we start newer prices of ductile iron pipes, we should improvement in changes. So,
Mr. Kumar, sorry to interrupt you, sir. The audio is now breaking.
Audio is breaking?
Yes, sir. The audio is breaking from your line, sir. Please check.
Oh, because you guys will. Okay. So I'm through with the summary. Let the questions be there. I will ask more. Shubhro will answer. Where my voice is breaking, interrupt me.
Should we start the flow for Q&A?
Let's start with Q&A.
I'll try to.
Yeah. So Shubhro, are you finding the same problem on my voice?
Yeah, sometimes it is getting cracked.
Wherever you find, and then you take over. Okay?
Sure.
Yeah, let's start the Q&A. I think today is a bad day.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Reminder to the participants, anyone who wishes to ask a question may press star and 1. The first question is from the line of Mithun Ashwath from Kiva Advisors. Please go ahead.
Yeah. Good afternoon, sir. Just wanted one question on. Just wanted to understand how is your expansion of the ductile iron pipe facility happening? Is that on schedule? Number 2 was also on the impending merger with Tata Steel Long Products. Where are we on that? Any timelines for both of these? Thank you, sir.
Yeah, thanks, Mithun. So the first one was on the expansion. Expansion is on. In fact, we expect to complete the first phase by let's say March. Okay, at least in phases we will be able to do, and March we should be able to do the first phase. On. There are some issues, especially because of the COVID third wave, but I think we should be able to surmount that. So by March end, we should have it on, the first phase. The second question on the merger process has been on, but there have been delays because of, the usual process, the regulatory clearances, the clarifications sought by the regulator. So that has been taking time, and I really don't know how long it will take. But it depends on the regulator and the kind of queries and responses we have. So we'll have to wait and see how it kind of matures into, how long it takes.
Oh, thank you.
Yeah. Okay. Thanks.
Thank you. Reminder to the participants, anyone who wishes to ask a question may press star and 1. The next question is from the line of Rohan, individual investor. Please go ahead.
Sir, I have 2 questions. First will be that
Sorry to interrupt you, Rohan. Your audio is not clear from your line. Please use the handset mode.
Is it clear now?
Yes, please go ahead.
So two questions I had. First was on the coke part. So sir, you said that 30% of the coke is procured from the market. So is it only for this particular quarter or every time, like throughout we purchase 30% coke from the market only, roughly 30-35%?
Yeah. So Rohan, I think I said 20%, not 30. So roughly 80% of the coke is captive, and balance 20% is from the market. And that's on an ongoing basis. It's not only for this quarter, but that's the general, requirement. So 20% sourced from the market.
Okay, sir. And the second question was on DIP side, sir. Sir, Tata Metaliks is honoring his older contracts, and you said that we are facing some very less margin or loss, I'm assuming. So what percent of our sales go into these older contracts, sir, and what impact they have on our EBITDA per ton?
So you can look at it. The EBITDA margins typically for us, for ductile iron pipe, have been upwards of 20%. If I look at it from raw material, in fact 22, 23, 25%. While in this quarter it's been much lower. It's been close to 10%. So the impact on the EBITDA margin is huge. That's because, as I mentioned, there has been a cost squeeze. Also, at the same time, the prices of DI pipes have not gone up because we are honoring the old contracts. What percentage? The percentage will change from month to month and quarter to quarter, but you can say roughly, let's say 70% would still be the old contracts.
20% of our volume, and these contracts are older than 1 year, sir? 1 year, 6 months?
Yeah. Typically, if you remember, we had made bookings of almost 15 months plus. And I think quarter 3 or quarter 4, I had mentioned that. So those old contracts are continuing. And we are continuing to honor them, honor those contracts. And that's why you don't find a bump up in the prices of ductile iron pipes, and therefore the margins of ductile iron pipe is subdued. But these will get sorted out in the next 1 or 2 quarters.
Sir, one last follow-up question on this point, sir. Then, have we changed any policy that are we now going for some shorter contracts instead of going for 12 months, 15-month contracts, given the recent price hike in raw materials, or are we still continuing with getting long-term 15-month contracts only?
No. So you see, the EPC contractor typically has a project which has to be executed over a period of 12 to 18 months, even 24 months. So they expect that, our customers expect that we have a back-to-back contract with them. And typically we, have that. It's just that this was a massive, movement, and it has, kind of impacted us to some extent on the price side. We have had an advantage on the pig iron side, but on the ductile iron pipe, we've had a disadvantage. I would say we have lost. In some sense, you can say we have lost. In another way, it's a part of the game. In an up cycle, you lose. In a down cycle, you gain. That's why we say the ductile iron pipes, market is much more stable, because it doesn't change every month. It's more over a period of time. So it gives you stability. What we've also done is, because of the ductile iron pipe prices being more long term and over a period of time, we've also hedged on the raw materials to some extent. And that is why you will find, even though there is a cost push on raw materials this quarter, it would have been much worse had we not done that. So to that extent, it's always, you can always hedge to some extent on the raw materials.
Sir, we hedge both iron ore and coking coal?
No, mainly coking coal. So,
mainly coking coal.
We do, by hedging, I mean that you kind of procure at prices, let's say, fixed to your long-term sales contract, rather than keep it open and then wait for month to month. So we do a combination, and that has helped us. So in fact, Shubhra Sengupta is here. He can explain better. He also looks after the raw materials. Shubhra, you want to come in and explain this a little better?
Yeah, if you see what MD is saying, that when we took the contract, that time the coal price was too less, maybe $120 kind of thing. And we have bought for a period of say 6 months, and in some cases 7-8 months. And that helped us. Even the coal, even in the Q3 when the coal has gone up to $400, we could use some of the old coals, and we can make some margin was there. What you are also suggesting, that there are some cases we have also done the paper transactions about the hedge, but that is very minuscule. But purely based on the physical delivery basis, we have bought some additional coal based on the contracts.
Understood, sir.
Right.
Thank you. Thank you very much, sir.
Right. Thanks.
Thank you. The next question is from the line of Bharat Sheth from Quest Investment Advisors. Please go ahead.
Hi. Thank you for the opportunity, sir. Sir, to understand little more on this pig iron, one, the volume was decline is purely because of our supply side constraint, or there was some dip in demand also, if you can give some color?
No, it's mainly because of the hot metal availability. If you look at it, we have increased the ductile. See, whatever hot metal we produced, we tried to maximize the ductile iron pipe because we want to finish off with the old contracts.
Okay.
And that's why you see a bump up in the DI pipe sales from 52,000 last quarter to 67,000 tons in quarter 3.
Okay.
And pig iron, because the overall production of hot metal was lower, as I said, one of the blast furnaces, when it went for shutdown, maintenance shutdown, and when it came back, it hasn't performed well. There have been problems in stabilization, and that has continued till for the entire month of December. And that is what has created the problem. Otherwise, we would have done much better, both in terms of cost and in terms of higher volumes and therefore more sales.
Okay.
So that has eaten up, quite a bit of margin. And so it's the performance which has hit us more, which is controllable, and I think in quarter 4 we'll get back. The market side, we have not been hit that badly. Although if we had also, let's say, gone on and contracted afresh, short closed the old contracts on DI pipes, then we would have had a much better scene. But we stick to our customers. We like to be long term, and we don't play as a short term game. And therefore, you find the margins of ductile iron pipes at a still lower level. And as I was mentioning, maybe 10% EBITDA margins or whatever, while typically it is more than 20%. So this also will get sorted out over the next 1 or 2 quarters, because now the new bookings that we have made, we have started making, those will become more, as a proportion, will start increasing. But that will take 1 or 2 quarters before it plays out.
To understand a little more on the now, what is the trend of this? One is a finished product. We said that in October we were able to raise, and since in December there was some dip. So on the finished product side and the coking coal and iron ore trend, if you can give what is current prevailing price and vis-a-vis average price of Q3?
Yeah. So let me start. Let's say iron ore. Iron ore prices peaked in the month of June or July, internationally as well as in India.
Correct.
Because as international prices go up, Indian iron ore players, they start exporting.
Correct.
When the prices come down, they don't export. Therefore, more availability in the domestic and prices come down.
Correct.
So after June, July, what has happened is prices have started coming down. But typically the iron ore that we purchase, we keep an inventory of, let's say, 2 or 3 months.
Okay.
So it gets consumed over a period of time. So the inventory that we, let's say, procured in quarter 2, the cost impact of that is playing into now in quarter 3.
Correct.
Which now for quarter 4, we will not have that impact of iron ore. It will come down. So that is number 1. Number 2 is coal. Coal peaked in the month of in September, $400 plus.
Correct.
And then after that, it started coming down, but it didn't come down drastically. It came down to, let's say, 320, 330. And then again, now it has started moving up. Again, it has crossed $400.
Okay.
As of yesterday. But in between, let's say in November and December, as it came down, there has been some drop in the coal prices, which you will see a reflection of that in quarter 4. So iron ore coming down, coal coming down, but coal will be a mixed bag because October the prices were higher and July, September, October when it peaked, those coals also would have come. Fortunately for us, we do not have too much of high cost coal. We did not buy at $400 and all. Because as I was saying, we had done some hedging. By hedging, I don't mean the paper hedging. What I mean is against the long-term DI pipes contract, we had picked up coal because we knew the prices were going up. So we just tried to procure more at prices linked to our DI pipe prices. So that is what Shubhra was trying to explain. So overall, though quarter 4, we will see some hit of raw material, and it will also depend on how the prices play out during the quarter. We think it will be reasonable. There will be a reasonable increase, and we now need to see how much of that really gets converted into finished goods. As of now, if you ask me, the finished goods prices have started increasing. In fact, in the last 15 days, we ourselves have increased the prices 3 times in the last 15 days in eastern markets. Okay. So we are seeing a bump up in pig iron prices. We are seeing a better proportion of newer orders of DI pipes now, which will start playing into the overall margins of DI pipes. And we will see, but we will see a cost push on iron ore, less on iron ore, more on coal and coke, because coke has also gone up. Coke, which was, let's say, 39,000 rupees, is now up to about 44, 45 or even more. So coke, but since our proportion of coke from the market is only 20%, so to that extent, we will not be very badly affected. But some impact will be there. I don't know whether I could explain to you, but please feel free to ask.
And sir, on this, what exactly is affecting this whole coal price business? Now, still Australia is not supplying, or any color on that?
Yeah. So couple of reasons. One is that if you look at it, China announced a curtailment in steel production in the second half of this year because of Beijing Olympics, Winter Olympics in February. Also, China is wanting to move more to scrap-based production and lower emissions. So there, on the China story is a big one, and I'm sure you guys would have read and understood it much better. So what has happened when China's production came down in H2, the demand for raw materials came down. Okay. And China being almost half of the world's steel production, therefore the impact on raw material, we started seeing that. And that's why you see iron ore peaking in June, July and coming down, coal peaking in September and then coming down. But as far as coal is concerned, while iron ore continues to be at a steady level now, at almost half the peak level. So in June, it reached a level of $215 or $220. Today, it is at a level of, let's say, 130. Okay. And it was at a level of 110, 115, let's say 15 days back or 20 days back. So there is some movement up on iron ore, but not significant. But on coal, we have already again crossed $400, which we had reached in September. And the reason for coal going up is primarily two. One is in Australia, typically these months are bad months. They have monsoons, they have cyclones, they have the bad weather hits them, the mining operations are disrupted, transportation is disrupted, and that is what is causing the problems of supply side. Okay. And now after February Olympics, Chinese may have started restocking, or there is some indication, we are still not sure, but there is some indication of restocking. So there is a renewed demand while the supply side has been affected badly. Indonesia has banned exports of coal, although Indonesia is not a major player of coking coal, but still. So you will find that overall the supply side is constrained. On the demand side looks to be more positive, and therefore there is a movement up. But overall what it does is the market sentiment, whether it's raw material or finished goods, prices going up is always good for everybody. So it is a positive sentiment in the market, and we are seeing that demand reflected in the prices as well as in an increased pull. So overall we are more optimistic than what we were, let's say, 1 month back or 1.5 months back.
So apart from, sir, Australia, is there any alternate source of coking coal, or they are the largest source, it will work like this only?
So seaborne, Australia, Canada and US, these three are the major players worldwide on seaborne coking coal. Then there are a little bit Mozambique, Indonesia, Mongolia of course is landlocked. Okay, but otherwise primarily these three are the countries.
Okay, and sir, ductile iron, you rightly said that within 1 or 2 quarters again with the renewal of, expiry of old contract. So if one has to, and a renewal of new contracts, so if one has to look, what is the delta between the current market price vis-a-vis old price? So how the price has moved without giving, specific what price we are doing?
So prices have moved up by almost 40 to 45% compared to last year in ductile iron pipe. So let's say if the prices were about 50,000 rupees per ton, last year, today they are at 75,000 rupees. That gives you some sense.
Okay. Thank you very much, sir, and all the best.
Thank you.
Thank you. The next question is from the line of Vinit Malu from Birla Sun Life Asset Management. Please go ahead.
Hi, good afternoon. Thank you for taking my question, sir. So I just wanted to know how has our iron ore cost changed compared to Q2 and Q3?
Hi, Vineet. Thank you for joining in. I'll request Shubhro to answer. He looks after raw materials, so he will be in a better position to answer. Shubhro, can you come in?
Yeah. So Q2 versus Q3, iron ore was almost stable. Maybe quarter on quarter we have spent 6 crore extra. But quarter on quarter, coal and coke has gone up substantially.
Sure. So I meant, so unit cost of iron ore has remained similar as Q2, more or less?
More or less similar, maybe 1,000 rupees here and there, mainly on the lumps.
Okay. And so compared to Q3, now the current cost, let's say the incoming material that you're getting, is it at favorable prices to us?
Yeah. It will come down, but as we are carrying the inventory, maybe for 2-3 months, it will come down gradually. So in the Q4, it will be lower than the Q3, and most likely Q1 next year will be lower than the Q4.
Okay. And so the effect of higher royalty was contained till Q2, right? Which I understand. In Q3, there was no such effect.
No. Q2 and impact was almost 47-48 crore. Q3 is almost another similar number. Because again, the same logic of the carry forward of inventory. But going forward, we are reducing the exposure on the high royalty kind of iron ore, such as lumps, such as iron ore from the Conbond mines. And compared to Q3 to Q4, royalty impact will come down further.
Okay. So in Q4 then, sir, we get two benefits. One is obviously on the price a little bit because as high cost inventory runs out. And, since the source of, let's say, iron ore is also changing a little bit towards lower royalty ore, so we get dual benefits. Is that correct understanding?
Yeah, correct understanding.
So Vineet, you're absolutely right. If I can just come in. Not only the prices come down, your royalty as a percentage also comes down, no? As an absolute value, because it's a percentage. So that comes down. Plus, we have consciously moved away from the high royalty iron ore and moved away. So we have changed our basket. So overall, the impact would be reduced, and we will be in a much better position to manage.
Okay, understood. And so my last question is on the mix of, let's say, the low price contract versus the normal price contract, right? So when do we cross that, at least, that 50-50 mark, when the normal price contracts are more than the low price contracts because of legacy?
So we'll be able to tell you by end of quarter 4 where we stand and how much. But I think in a quarter or two, we should start seeing a significant shift. We still are carrying, let's say our order books today is about 9 to 10 months. And as a proportion, I think we still will be having 60-70% would be the older contracts. So, but what happens is, even if you are carrying the older contracts, what gets executed in which quarter is often difficult to say because it depends a lot on clearances. And now with the COVID, etc., which project side will be clear, I don't know. UP was a major one. UP is having elections. MP is another one. So, but there is a rush to complete projects before March because the budget runs out. So you'll suddenly find new orders which come in and they give us a bump. Okay, but what we have done is we have honestly tried to fulfill all the orders of our customers and maybe stagger a bit, but there is a limit to that. But I think all this will get sorted out in a quarter or two. So you'll have to have patience with us for a quarter or two, and after which I think we run a very good, I think sprint after that. It's just a question of 1 quarter or 2 quarters at most.
Sure. And sorry, sir, one more question, although I did say last question. One more question is that, so sir, there is no rethink on the way we contract or we enter into contract with these players, right? This is what you explained in response to another question.
Yeah. So it is a long-term game. We shouldn't get carried away by, we shouldn't get carried away. See, I also had, I think, mentioned to you, Vineet, in a separate conversation that, if you are sticking to your customer and long term, you also get a preference. And we also seek premiums over competition. Saying that, look, if I am giving you reliability, then I must get something. Huh? Otherwise, why am I giving you that reliability? So it's a long-term game. It's not something which is clearly reflected in the quarterly results. But we would like to play the long-term game, both from an ethical point of view and also from a perspective of, I think, long-term sustainability for results.
Sure. All right. Understood. Thank you so much.
Right, Minit. Thanks.
Thank you. The next question is from the line of Kunal Kothari from Centrum Broking Limited. Please go ahead. Mr. Kothari, your line is in talk mode. Please go ahead with your question.
Yeah, thank you for the opportunity. So I would like to know how much will be the coking coal inventory that we will be having, and the quarter-on-quarter impact in quarter for the shift in cost per ton that we can expect.
Okay. Shubhra, you want to respond to that?
Yeah. For per ton of hot metal, we expect that cost due to coal and coke will go up by almost 3,000, 3,500 or 3,000 to 4,000 per ton of hot metal. But as we expect that our furnace will do better and we will be able to use more PCI, which is at much lower cost, we'll try our best to contain the increase.
And anything on the inventory that we still carry?
We carry an inventory of, say, all put together maybe 2.5 months. But that is a different types of coals we carry. We are carrying more of PCI coal and less of prime hard coking coal. So on a combination, on a weighted average, maybe it is a 2.5 months.
So it was actually you earlier mentioned we had.
Sorry to interrupt you, Mr. Kothari. The audio is not clear from your line. Please use the handset mode.
Yeah, am I audible? Hello?
So we can hear some audio from your line, so it's not clear.
There is some disturbance. Mr. Kothari, what you can do is you can log out and log in back. Maybe.
Yeah, sure. Okay.
Thank you. The next question is from the line of Falguni Datta from Jet Securities. Please go ahead.
Hello. Sir, this 47 crore that you mentioned, this was the impact of royalty premium, right? The 150%.
Yeah, royalty. 47
premium,
crore
no?
in premium, extra, additional royalty.
Additional royalty. And the other thing I wanted to know is the sales for pig iron that you mentioned for the quarter. So what would it be inclusive of the interdivision transfer to the DI segment?
No. So 75,000 is a sales to customer, outside sales.
And inclusive of interdivision?
So we have produced, say, 65,000 of DI pipe. So similar quantity approximate.
Okay. And sir, what do you, can you just give some outlook on the DI pipe business as to, let's say, for the next 6 months to a year in terms of pricing and demand supply?
I would request MD to respond.
Yeah, I'll come in. So today, the order load for the industry today would be roughly 1.3 million tons. And inquiries in the market is another 1.3 million tons, let's say. So total firm demand visible is, let's say, about 2.6. And there are projects for which inquiries have not yet been floated, but projects have been announced or sanctioned, is another 2.6. So that takes your number, 2.2, sorry. So that takes your number to 4.8 million tons. So there is a visibility of demand, either firm or to be firmed up, of about 4.8 million tons of DI pipes over the next 2 years. The supply side, the installed capacity of the industry is roughly 2.6 million tons. The industry operates at a level of 80% capacity utilization, 80, 85, whatever. So what we are saying is 2.2 plus 2.2 is 4.4. So in 2 years, you have a supply of 4.4 and you have a demand of 4.8, which is visible. Now, this is not including some more projects which are going to come up and which are being announced now. So overall, the demand is pretty robust. We see a demand growth of double digits over the next 5 to 7 years. In fact, optimistically, it is even more, but I'm still looking at a 10-12% minimum demand growth CAGR over the next 5 to 7 years. If you look at prices, the prices are today at anywhere between 70 to 75,000 rupees per ton, depending on the product mix, which was about 50,000 rupees, let's say, a year back. The prices may stabilize a little bit if the raw material prices cool, but generally the sentiment is now again positive, and therefore the prices may remain range bound, let's say. So overall, the DI pipe business seems to be absolutely in a gung-ho mode with limited supplies and demand actually exceeding supplies by a large margin. And this is not for 1 or 2 years. We are seeing this over the next 5 to 7 years. Unless the government changes its policy or has no funds to invest, then it's a different matter. So that's where the overall, story is on the DI pipe demand and supply. Does it give you a
quite
sense?
helpful.
Yeah. Okay.
And sir, just one last question on that. How much do we expect to do in FY23 in terms of DI pipe and pig iron?
So our capacity of hot metal roughly is between, let's say, 5.5 to 6 lakh tons. And that's the production we envisage, depending on shutdown, this, that, exact. That's why I'm not giving the exact number, because there are some shutdowns which happen and which may be planned next year also. So we'll need to work that out in an annual business plan. Based on that, exact. Now, out of that, we were having a nominal capacity of, let's say, 2 lakh tons of DI pipes. This will increase by 1 lakh ton in FY23. So that becomes, let's say, 3 lakh tons. Because we are doing the expansion in 2 phases. The first phase will get commissioned by, say, March. So when we say commissioned by March, not everything will start in March. Some of it will start in March. There are some approvals, so it may go into April, May. So exact number is difficult to say, but let's say on a rough thumb rule basis, say 50% will come in next year, and the balance 50% will come in FY24. So 2 lakh tons DI pipe becomes 3 lakh. If let's say we have 5.5 lakh tons of hot metal, then you can subtract, 3 lakhs from there. That makes it 2.5 lakh tons of hot metal. But you also have to do a few other things. I'm not trying to confuse you, but there are yields and there are other things. So the number will be not exactly the same, but just for a very broad understanding, you can take this as a material balance. 5.5 lakh tons of hot metal, 3 lakh tons of DI pipes, and 2.5 lakh tons of pig iron. Very, very broad.
Thank you, sir. That's quite helpful. Yeah. Thank you so much.
Right. Okay. Thank you.
Thank you. The next question is from the line of Yogansh Jeswani from Mittal Analytics. Please go ahead.
Hi, sir. Thanks for the opportunity. A couple of my questions have already been answered, so I'll just go for a few follow-ups that I have. So you mentioned the order book for 8 to 9 months, right?
So about 9 to 10 months, yeah. No problem.
9 to 10 months. Okay. 9 to 10.
Yeah.
Sir, I think if I recall correctly from our past Concall interactions, I think last year somewhere around the same time the order book was again something like 8 to 9 months, and before that as well also I think 9 to 10 months of order book visibility. While throughout these years we have been very positive about the industry prospects. So is it fair to assume, given the kind of situation we are in, the demand that we are seeing is still not as per our expectation, and you expect things to improve?
So last year, around this time, I think the order books was more. I think we went up to between 15 to 16 months, if my memory serves me right. And I think in January we had something like 15, 16 months. But as the prices have started to rise, we have been very choosy in picking up orders over the last 9 to 12 months, 9 months in particular. And that's why you see it has come down back to 9 to 10 months. In general, anywhere between 9 to 12 months is a reasonable order load to have. If you have more than that, you should be happy. If you have less than that, then that's a cause for worry. But so that's a general statement. As far as industry is concerned, I think there is a bit of a resistance right now from the customers to, let's say, contract. They were waiting for prices to fall. But as the market prices have started increasing again over the last 2 to 3 weeks, I think we will now see a rush to close the contracts. And that might improve the order books of the industry as a whole, and for us also. That's what is my anticipation. Because November and December, the prices started falling, so many of them were waiting for the prices to fall and the sentiment to come down to negotiate better. And also the fact that they have contracted projects at, let's say, older prices. So it's not also viable for many of them to really pick up ductile iron pipe at a price which is 40 to 50% higher. So that's also been a concern for them. But now I don't think many of them will have an option. They will have to do. Because when you take up projects, you lose some, you gain some.
Right. I think that has been the case in our case as well, that our whole order books, which were supplying now at a higher RM, so that is squeezing out some market margin. So I think EPC contractors are now in the same place. So, sir, just on that, the way we have supported our EPC customers, we haven't increased the prices. So, do you think with now RM prices trending and DI pipe prices trending in couple of years, not couple of years, couple of quarters, when the RM prices are down, we'll be able to hold on to this delta margin that we might get? Or do you think in this case the contractors might come back and say,
see, that's all
given the overall industry, sir, I think the competition is still very intensive. Couple of players still under pressure in terms of balance sheet, so they might be a bit aggressive in letting go of some delta margins just to stay afloat. So hence for a long time.
Correct. No, so that risk is always there. I think that's there in any industry and also in our industry. But typically what happens is that the customers also know, whom to contract with. And especially when the markets are not very sure, people would like to contract with people, with suppliers who are more reliable, more long-term. So I think we have an edge there. But there will be a few here and there who will try and cut corners and try to negotiate, renegotiate, like many of the suppliers have done. So I think it's a fair game with all kinds of people. And I think we should stick to our principles and do what is right. And that's what we have been trying to do. In the process, we will get hit sometimes, but in the long run, we will gain. That's the policy and the philosophy that we have, and I think we are doing well. And as you can see very clearly from the levers, I think it's a very optimistic scenario going forward over the next 5 to 7 years. I don't think the market has really captured this, but it's really a fantastic opportunity in the water infrastructure sector. And not many players can come in. It's not like making rebars or the small players who come in suddenly and start making. You can't do that. It's a tough one. It's a complex one, and not everybody can come in. It's got high entry barriers both in the marketplace as well as in the operations. So therefore, the incumbent players like us have a very serious advantage, and I'm sure that will show up in the results over the coming years.
Absolutely. I think I've been invested in tracking Spark for a very long time now, and I really appreciate the way we have worked on our cost efficiencies, bringing in, I think, a lot of efforts which you have driven have been very helpful. But sir, just on an answer to a previous question, you had mentioned that in DI pipes we are expecting that 20% kind of margins can be done when things are good. But just by looking at last 4-5 years of quarterly numbers, in terms of EBITDA, I think hardly twice or thrice we have surpassed or touched the 20% kind of EBITDA margins, while the broader range has been between 9 to 13, 14%. So, what gives you confidence for the 20% plus kind of margins when in the last 4-5 years history hasn't shown so?
No, actually, you are looking at the wrong number. That's why what you are looking at is the margin on the basis of transfer price. Actually, all other players, our competition, they calculate their EBITDA margins from raw material, while we do on a transfer price basis. So part of the benefit goes into pig iron. If you look at purely ductile iron pipe, then the margins have been consistently above 20%. In fact, higher than 20. It's more like 22 to 25%. Okay. This quarter has been different, as I explained to you, because of the various reasons. So it's not a question of confidence. We have always performed like that. You look at the quarterly margin, EBITDA margin of ductile iron pipe. After removing the transfer price, you will see the numbers very positively between 22 to 25 on a very consistent basis. Shubhro, you want to explain this better?
Yeah.
Shubhro?
Yeah, I'll do. So, in our system, we treat both PI and pig iron and ductile iron pipe are two independent profit center, and PI division sells DI hot metal to DIP. So, based on the market price is some numbers. Therefore, while you see the independent DI margin, it will look less. But if you do iron ore to DIP, long. I think last 3 years, on to the extent DIP is concerned, we have done 20 plus, maybe sometimes 26-7 also. This quarter also, if you see, that is internal number not published, that iron ore to DIP is almost 15.6 or almost 16%. Maybe after a long quarter, we are below 20. So what we plan, and maybe down the line, when majority of our hot metal will go for the DIP, this anomaly in any case will get nullified. But nevertheless, anytime if you want a more detailed and specific iron to DIP margin, we can, for the earlier quarters, we can have some detailed discussion on that separately.
Thank you. Mr. Jeswani, may we request that you return to the question queue for follow-up questions. Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 2 per participant. Should you have a follow-up question, we would request you to rejoin the question queue. The next question is from the line of Saket Kapoor from Kapoor and Company. Please go ahead.
Yeah, namaskar sir, and thank you for the opportunity.
Namaskar, Saket.
Yes, sir. Sir, firstly, sir, on this part of the pig iron prices, which you have told that we have taken 3 hikes. So, what was the exit for the December quarter, and how have the prices moved up currently, sir? If you could give some more color.
So, the prices of pig iron have fluctuated, but in a range. In general, you can take the prices have moved between, let's say, 44 to 47,000 rupees per ton, depending on market to market, and month to month, or rather week to week. In the last 15 days, the prices have moved up by more than 2,000. Shubhra, what will be the number? 2,500 rupees increase?
Yeah. Yes, sir.
Yeah. So, it has been in a range-bound play between 44 to, let's say, 47, 48. And now again, like let's say in eastern markets, it's more than 48 today. In north, it will be closer to 46. West will be again between 46 plus. So today the market prices are between 46 to 48, let's say, which was, let's say, 44 to, or around that in, say, middle of December or third week of December. So prices have just started moving up again.
And if we take the averages, sir, for the last quarter, what was the average for pig iron prices?
Average for December quarter for us would be, let's say, for the foundry grade, I'm talking about the main grade, the prime grade that we sell, would be, let's say, 44.5 to 45. 44.5 you can take. Shubhra, right. Can you give the exact number?
Yeah, foundry grade, similar number.
Yeah,
but if we took weighted average and net realization, it will be tad below 43. 42.
No, so don't confuse them with net realization. You stick to one number, which is the landed market price. Then otherwise they will all get
That number is perfect.
different numbers. Yeah.
Number is correct.
Yeah. Because DI pipes also I am talking about the landed price.
Yeah. True. Number is correct.
Subhra, if we take this one-off item about this this royalty part of 48 crore, 47 crore for the last two
50,
preceding
correct,
quarters.
50.
Hello?
Yeah, approximately 50 for Q3.
50 for Q3. So, what is going to change now going forward? And sir, out of this 50 crore, what was the pass on, sir? Or was it totally borne by us in the finished part? And one question to what sir has told earlier, Kumarji. What, sir, key reasons, sir, for this increase in pig iron prices? Was the dull market and the stimulation in the market that has happened, or any raw material input push that has?
See the cost push. Cost push. If you see today, market price of coke is 45,000 ex plant. This means landed dry would be 47 kind of thing.
Okay.
If the pig iron prices does not go up, some of the shops will get closed. Because if you see that on the total cost things, the highest cost is the cost of fuel.
Right, sir.
So pig iron price has to go up, or the coal price has to come down. Otherwise, it will not be question of survival.
Right. So this will not be margin accretive, sir. This is not going to be margin accretive. This is only be a pass on. Whatever the rise has come, it is not going to improve the margin.
Yeah, to large extent.
Yeah,
but depends based on the efficiency and all.
Okay.
No. Also depends on, Saket, on what percentage of your coke is captive. Let's say for us, 80% is captive. So the hit on us is not, we are not going to be, our coke cost is not going to be 45, 47. What Shubhro is saying is about the market. There are players who buy 100% from the market. They are badly impacted. But for people who have captive coke, they are not so badly impacted. So it's that way.
And about this one-off item, sir, if you could answer, one more follow-up I have, and then I will conclude.
Yeah.
About the one-off item, sir, you were explaining.
What is that one-off item?
So the one-off item,
okay. Shubhro is explaining.
Royalty is not a one-off. It will continue. But the impact will come down going forward because one is the prices are coming down. Second is that our basket is also changing. We are reducing exposure to lump. We have reduced exposure to unborn fines, which are high royalty. So, H1, H2, the impact of royalty going forward, it will come down substantially.
Okay. So can you quantify for a ballpark number, sir? How should it shape up?
I think, let me just explain this. Saket, if I were to explain to you more as a percentage, then if we were saying if high royalty source of iron ore, if last quarter was let's say 67%, then today, so let's say 70%, then today it would reduce to, let's say, 40% or so. So the low cost iron ore from a royalty perspective has gone up from, or will go up, let's say from 25-30% to, let's say, 50-60%. Shubhro, just ballpark tell me, is that right?
Yeah, it's correct. It's correct.
Okay. And Sandeep sir, if you look at what the commentary has been over the quarters, wherein Tata Metaliks as management has been very bullish on DI pipes going forward, and also the expansion now kicking up in phases, and also the realizations going up. So, what is currently the aspiration for us to be there in this DIP segment, sir? Earlier, this merger was, when earlier we used to discuss it, the Tata Steel had not come up with this plan of merging into long product and creating one single entity. So how does our plan going ahead in terms of our market shares in DIP going forward, sir? Because I think so there have been 2-3 M&A activity also, if I may term, that has gone through, and somehow we have not found attraction in them, in maybe the asset or maybe the prices, whether it is Satwana, whether it is VLS, or whether it is even, if I may quote ISMT, how much it would have gelled to us. So we are taking the greenfield route completely if our actions are to be seen. So going forward, what is going to be the aspiration in DIP segment? What kind of player are we going to emerge? Now also when M&A activity has happened with Electro Steel and Steel Pipes getting merged, and they being the largest player today. So where are we heading, sir? Say, and when we are seeing such a blue sky opportunity going forward in terms of demand. So what is the thought process now, sir?
So I think one of the let's say numbers which have been floated around, and I think has been mentioned even by our parent Tata Steel, is that we would like to be a 1 million ton DI pipe player, and we have this vision in our mind that we need to achieve this 1 million ton as soon as possible. We would be at say 500,000 tons production by FY24, 4 lakh tons capacity, but with a production ability to produce up to 5 lakhs, let's say 4.5 to 5 lakhs. So we need to either acquire or grow at some place or the other for another 5 lakhs, which is not such an insurmountable task. Our cash flows are very good. In fact, the real picture has not yet emerged. Last 2 years have been COVID years, and the government, the way it is going for water infrastructure, it's an amazing, I think, run that we are all foreseeing. I make this a point to explain to our investors and shareholders whenever I meet them on an individual basis or wherever, is that, look, you need to understand this is a very different business. People can't get in so easily. And if people who come in, they struggle for years before they establish themselves. It is not like making, somebody putting up a, steel pipe or a polymer pipe. You buy HR coils and put it up. It's easy to do that. Here, it's very highly complicated. And you can see that. And that's why you find players struggling, even established players. There's only a few players, let's say 3-4 of us, who consistently make money, because it's a high entry barrier on the technical side as well as on the market side. So the DIP business is, I think, in for a major boom. It's a huge positive because the government is investing the way it is investing, and therefore there is really no problem for an established player. In fact, it's an opportunity and a great opportunity for us. If we can't capitalize on that, then it's our, I think, incompetence that we could not do it. On the market side, it's a great one. Positioning side, it's a great one. I don't know whether I could answer your question, Saket. Did I miss out something?
The point that 1 million is the target going ahead on the top of this 4.4 currently. This market is going to, and the growth we are expecting, sir, is about in double digits. So 2 years or 3 years down the line, sir, what is the capacity addition that we are envisaging? And lastly, sir, also on the pig iron part, sir, earlier last quarter, I think so for the September quarter, we have exported also, and the realizations were better. So what portion of current quarter pig iron sales have attributed to the export segment?
So the volume of 1 million tons is an ambition, is an aspiration right now. Once we have our board approvals and everything is in place, then we will, inform you. It's not fair for me to tell you by when, etc., etc. Those details have to be first gone through the board and cleared, and then only I can tell you. As far as exports are concerned, Shubhro, on pig iron, do you recall the number? What percentage was it in exports?
This quarter, pig iron export is hardly, maybe not more than 5%. Last quarter, it was higher because we did one bulk shipment of around 20,000.
Thank you.
This quarter is hardly.
Thank you, Mr. Kapoor. May we request that you return to the question queue for follow-up questions. The next question is from the line of Mukesh Gupta, individual investor. Please go ahead.
हेलो हेलो आवाज आ रही है मुकेश?
हाँ बताइए.
मैं पवन जी से बात करना चाह रहा था, जो टाटा स्टील से हैं, रिलेशनशिप मैनेजर. पवन जी, हेलो.
Pavan may be on a listening mode because he has joined late, so he is on listening mode. If you have got any question relating to Pawan, you can flag here. You can flag here. We'll get it answered subsequently.
ओके मैं पवन जी से ये जानना चाह रहा था कि मर्जर पे नवंबर 20 में हमारा मर्जर अनाउंस हुआ था और अभी तक भी उस पर कभी भी आपकी तरफ से मतलब इन्वेस्टर रिलेशन में कभी भी उसकी तरफ से कुछ शेयर नहीं होता है कभी कुछ। आप अभी भी रिजल्ट में आखिरी में एक लाइन लिख देते हैं छोटी सी कि स्टॉक एक्सचेंज को दिया। 3 क्वार्टर से स्टॉक एक्सचेंज ही चल रहा है, तो आपका हमेशा मर्जर पे इतना टाइम लग रहा है, उसमें कुछ इन्वेस्टर से कुछ शेयर नहीं होता है। अभी भी फर्स्ट क्वेश्चन बीच में एक 20 मिनट हमारा ऑडियो कट हो गया था, तो 20 मिनट की मैंने कॉन कॉल नहीं सुनी है, वापस से रिज्वाइन करा है। अभी भी इन्वेस्टर ने पहला क्वेश्चन ही मर्जर पे था, तो आप टाइमलाइन भी नहीं दे पा रहे हैं, तो इतना टाइम क्यों लग रहा है? सब ऑलमोस्ट 15 महीने हो गए हैं। टाटा जैसी कंपनी को अगर इतना टाइम लग रहा है तो क्या रीजन हो सकता है?
सो मुकेश जी, हाँ, आपका जो सवाल है वो हम टाटा स्टील IR टीम के पास में पहुंचा देंगे और उनको रिक्वेस्ट करेंगे कि आपको
इन्वेस्टर से कम्युनिकेशन ही नहीं है कुछ मर्जर पे। एक सेकंड क्वेश्चन और है कि हमारी कंपनी जाएगी, टाटा लॉन्ग में मर्ज होगी, वहाँ पे भी सेम सिचुएशन है। मतलब संस्कार भट्टाचार्य जी हमारे यहाँ पे भी कंपनी सेक्रेटरी रहे हैं, अभी वो लॉन्ग में है। मैंने उनसे कई बार कन्वर्सेशन करने की कोशिश करी है। टाटा स्टील लॉन्ग न तो कोई इन्वेस्टर कन्वर्सेशन करती है, कॉन कॉल करती भी नहीं है। मैंने नवंबर से उनको मेल कर रहा हूँ, वो हर बार कई मतलब 2-3 महीने में मेल करने के बाद फ़ोन उठाते हैं और फिर कहते हैं हाँ मैं आपका जवाब देता हूँ 15 दिन में। उनके 15 दिन होते ही नहीं कभी पूरे।
ओके।
मतलब ये टाटा का कल्चर नहीं है साहब। मतलब कि इतने दिन तक आप इन्वेस्टर को जवाब नहीं देते हैं, मर्जर पे आपका क्लियरिफिकेशन। दूसरा ये होता है सर कि जैसे हम लोग ट्रेडर्स भी हैं, इन्वेस्टर भी हैं, स्क्रीन बताता है कि भाई कहीं ऐसा तो नहीं है कि मर्जर नहीं होने वाला है या मर्जर नहीं है।
तो आपने ये क्वेश्चन जो है ना सवाल पवन जी के लिए रखा है, तो हम लोग पवन जी को पहुंचा देंगे आपका सवाल।
आप भी जवाब दे सकते हैं, कोई इशू नहीं है। टाटा स्टील आपने तो इसलिए उनसे पूछा है, पर मतलब आप भी जवाब दे सकते हैं, कोई इशू नहीं।
हमने ये जवाब आज सवेरे मीडिया में भी दिया था। हमने ये बात कहा था कि ये जो प्रोसेस है मर्जर का, ये लंबा चल गया है, ये मैं मानता हूँ बात को। और अभी हम लोगों के साथ में बीच में रेगुलेटर के साथ में क्लैरिफिकेशंस थे, क्वेश्चंस थे, उसको आंसर किया। फिर कोविड सेकेंड वेव आया, फिर थर्ड, तो हो गया। मैं आपकी बात बिल्कुल सहमत हूँ इस बात में। और मैंने ये भी कहा कि मैं इसलिए नहीं बता पा रहा हूँ कि कितना टाइम लगेगा, बिकॉज हम लोग तो बहुत जल्दी चाह रहे थे करने का, लेकिन हो नहीं पाया है। तो हम लोग आपको कोशिश करेंगे कि अगर हमको कुछ बेटर क्लैरिटी मिलता है तो मैं आपको दूंगा, क्योंकि विदाउट क्लैरिटी कुछ भी बोलना ठीक नहीं रहेगा।
राइट।
आई एम सॉरी फॉर मेरे पास बहुत क्लियर रिस्पॉन्स नहीं है इसका।
सर तो मेरा केवल एक रिक्वेस्ट थी आपसे कि इसका अपडेट दीजिए सर। मतलब कि भाई हम किस स्टेज पे खड़े हैं, अभी क्या है।
हम कोशिश करेंगे कि नेक्स्ट क्वार्टरली कॉल में इस पे थोड़ा एक बार अच्छे से चर्चा करके ये करके फिर आपको हम जवाब देने की कोशिश करेंगे।
डेफिनेटली पवन जी से कीजिए। मैंने मेल करा है नवंबर में, कंटिन्यूसली भट्टाचार्य जी को भी मेल कर रहा हूँ। वो कोई मतलब इन्वेस्टर को कोई डाटा ही नहीं प्रोवाइड कराते हैं लॉन्ग में। भाई अल्टीमेटली टाटा मेटेलिक का एग्जिस्टिंग तो भविष्य में जाके लॉन्ग में मर्ज होना है ना।
हाँ जी।
तो हम उसको भी ट्रैक करते हैं। भाई कंसोलिडेशन ही देखना है ना हमको। हम तो लॉन्ग टाइम इन्वेस्टर है, 2 साल 3 साल 5 साल बाद तो कंपनी एक ही होना है ना।
नहीं ठीक है, आपके सवाल को हम जरूर उनको पहुंचा देंगे और विल ट्राई एंड गेट आंसर्स।
डेफिनेटली मतलब इन्वेस्टर से कम्युनिकेशन में बड़ा लेकुना है दोनों चीजों पे, आप उसको थोड़ा सा देखिए।
जरूर। हमारे टाटा मेटालिक्स के लिए अगर आपको कुछ भी सजेशन है तो आप जरूर दीजिए। लॉन्ग प्रोडक्ट्स का या टाटा स्टील का मैं उनको पास ऑन कर दूंगा क्वेश्चन आपका और सजेशन भी।
थैंक यू वेरी मच।
ओके, थैंक यू।
Thank you. Ladies and gentlemen, that was the last question for today. I would now like to hand the conference over to Mr. Sahil Sanghvi for closing comments.
Yeah, thank you, Faizan. We want to thank the management for patiently answering all the questions. On behalf of Monarch Network, we also want to thank all the participants for being on the call. Sandeep, sir, do you want to give any closing comments?
Not really. I think we have answered a variety of questions, so they have got a hang of what. But despite this, my only point to the investors is, and I heard Mukesh you saying not getting responses, at least from, if there are any questions, anything, if people want to meet us separately also, we are more than open. Okay. If there is enough meat in what you want to know, we are absolutely open to answer all your questions. We try to do it honestly and transparently to the extent that is practical. So that's the only point I will say, and we'll continue to do so. Sorry if we have missed out on any particular answer. Like, for example, I know on the merger, there is a lack of, we don't have full clarity on this because it's not fully with us. It's a regulatory part. So hopefully we'll get some more clarity over the next couple of months. Thank you. Sahil, over to you.
Thank you, sir. Yeah. Thank you so much.
Okay.
Thank you.
So we will log off, right?
Thank you.
Thank
Yes,
you.
very much.
Thanks. Bye-bye. Thanks, Sahil.
Yeah.
Thank you. Ladies and gentlemen, on behalf of Monarch Networth Capital Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.